Federal Multi-Peril Crop Insurance Program, that is MPCI, is developed, managed, and reinsured by the USDA Risk Management Agency, who in turn contracts with approved private insurers to issue policies, adjust claims, and pay losses to the grower. There are no differences in coverage or premium between carriers, making it easier for you. There are several fruit and nut crops which can be insured for yield losses. In California, those include many specialty crops such as almonds, walnuts. Actual production history, or APH, crop policies are based on the grower's actual past production history. This helps growers if they suffer crop yield losses due to damage from natural causes such as drought, untimely rains, hail, frost, insects, or wildlife. Farmers who wish to buy a policy must do so before the sales closing date for each crop. The grower can select coverage levels beginning at 50% and up to 75% of their approved historical average production. Here's how it works. Daniel and Michael farm 100 acres of almonds. With the help of their crop insurance professional, Dominic, they decide to insure 75% of the orchard's past revenue history. The average past production has been 2,500 pounds per acre. Their orchard suffers a crop loss due to untimely frost at bloom time in the spring. Daniel notifies his agent within 72 hours of the event happening. The carrier sends their adjuster to inspect the damage. The crop is harvested but only produced 1,500 pounds of nuts per acre. Since their historical production was 2,500 pounds per acre, at 75% coverage, that's a guarantee of 1,875 pounds per acre. 1,875 pound guarantee minus the actual production of 1,500 pounds leaves a deficiency of 375 pounds per acre. The RMA determined value of the crop is $2.15 per pound. 375 pounds multiplied by $2.15 per pound multiplied by 100 acres equals $80,625 total payable loss. This helps them to cover the fixed costs invested in the crop and keeping their family farm going. Since federal crop insurance is partially subsidized and backed by the USDA, rates are affordable. The farmer pays a portion of the premium. The government pays the rest. Your first and most important decision is to work with a specialist in this type of insurance coverage, someone who not only understands the program, but also the risks you face in bringing your crop to completion. At Golden Pacific Crop Insurance, our agents have 2 decades of experience in crop insurance and still farm our own crops as well. We fully know what you face out there with ever-increasing regulations, water and food safety issues. We know the crops because we grow them. Give us a call and learn how we can make this very important risk management tool something that can be easy to use and much more affordable than you may think. Call us at 559-825-CROP, that is 2767, or by email at dfino@goldenpacificcrop.com.